Well, market movements over the past couple of weeks are almost reminiscent of those almost 2 years ago after US investment bank Lehman Brothers went belly up. Volatility is on the increase with the VIX index in the US poised at a 13-month high and the Savi here in South Africa soaring above 30 again yesterday. Latest news, of course, is that the US Senate has approved the most far-reaching restraints on big banks and other firms since the 1930s. Joining me with more on this is Dawie Roodt. He's chief economist at the Efficient Group. Dawie, thanks for coming in this afternoon.
Thank you.
Dawie, the financial reform bill in the US, of course, we knew it was coming. They've been debating this for ages. Just the latest move to cause some uncertainty in these markets, though.
Yeah, well, let's just unpack it a little bit. What can we expect? And remember, there's still a lot of debate that will still go on before we get a final decision on what the eventual bill will look like. But essentially, I think there are three issues that are important. First of all, there will be a fund, a new fund. And of course, the depositors, the clients will pay for this new fund. Banks will have to put a big fund together, and that fund will be used to bail out future banks or financial institutions that get into trouble, firstly. And secondly, of course, there will be a committee overseeing all this to make sure that the banks and all the other financial institutions behave themselves in future. And that means a huge layer of bureaucracy that will be added to the whole system. And then thirdly, of course, banks are banned from trading in certain instruments, proprietary trading, for instance. And that, of course, will impact on the bottom line of banks. So if you put everything together, it means more bureaucracy, bigger costs to banks. Eventually, they will shift that down to their customers as well. Less profitability, and I'm afraid it will probably impact negatively on financial shares, certainly on the banks in the United States, and it can impact on the rest of the economy as well. And I'm not so sure it will have the required effect over the long term. I'm not sure this is really going to solve the problem.
Of course, Eleni, we were listening to Stephen Kosev's interview on CNBC Europe yesterday, which we showed on the programme, and he was saying that banks are going to be less profitable going forward. And this is just one of those things that's going to add to that, isn't it?
Exactly. And Dawie, I mean, when you look at the profitability going forward, we know that banks already have come under significant pressure and they've been dealing with other issues as well. So what is the investment case for the likes of banks going forward, and how do you think South African banks are going to be affected by the new regulatory bills that have come to the fore in the US and of course in Europe as well?
I don't think it's really going to impact fundamentally on the South African banks. We've got a totally different regulatory environment in South Africa. I think our banks are very well capitalized. I think about the regulation and the legislation in South Africa is much more healthy. So I don't really think it will impact on the South African banks fundamentally. But of course, there's as always a sentimental impact on the banks in South Africa. When financial shares will come under pressure, usually our banks get come under pressure as well, and usually via things like, for example, the capital market and via the exchange rates and so on. But the short answer is probably not, but in the short term there could be an impact on our financial shares as well.
I mean, our banks aren't nearly as big in proprietary trading as the US banks are they?
So, some of them are quite big, not nearly as big as the US, because they are much more advanced, much more sophisticated than the South African markets, or our financial markets are quite sophisticated, but certainly not. That's not that important to the local banks. Our banks are pretty much conservative, traditional banks, while in the case of the United States, they...
And that's, of course, what helped us last year, isn't it?
Most indeed, yes.
Looking at the Volcker rule, because that's also under the spotlight, and some banks that will be affected quite dramatically, JP Morgan Chase, Bank of America and Goldman Sachs, and banks that have been under the spotlight for proprietary trading and that have done things, of course, that haven't exactly been so clean-cut.
Well, yes, but I think there's perhaps another reason why the banks are not really the flavor of the month and everybody's pointing fingers at Wall Street, and that is simply that I think macroeconomic policy was wrong the last couple of, in fact, the last, say, 10 or 15 years. The banks played along. The authorities created an environment where banks were actually allowed to create all these instruments. And a very good example is Freddie Mac and Fannie Mae. The reason why we have Freddie Mac and Fannie Mae is because of interference and involvement of politicians in the markets trying to do the so-called right things to the markets.
Give everybody a house.
That's, for instance, you give a house to people that simply cannot afford it. So who's really to blame here? And I think that we are blaming the wrong people here. We're blaming the banks, while I think monetary policy and fiscal policy was simply wrong.
Let's talk about Europe. Financial crisis in Europe. Is it deepening? Is it getting better?
It's
Over?
I think the financial crisis in Europe is over, and let me tell you why.
I think you must be speaking to Angela Merkel, though.
Let me tell you why. Because a month ago, we didn't know what's going to happen. A month ago, we didn't know whether the ECB is going to come to the party. A month ago, we didn't know whether especially the government of the German government is going to assist the Greeks, or whether they're going to do something in the financial markets. We know that now. And we are pretty much in Europe now where the US economy was about 2 years ago. There was a financial crisis initially, and eventually that impacted on the real economy. That's where we are now in Europe. We've got clarity now. We know the ECB will be buying Greek paper, for instance. We know that the Germans will bail out the Greeks. We know that the Germans will interfere in the financial markets. The banning of the naked short positions, for instance, is an example of that. So the financial crisis is over. In that sense, of course, it's not really over. If a bank gets into trouble, we know that bank will be bailed out. The real question now is how is this financial crisis of the developments, the financial developments, going to impact on the European economies, and how is that going to impact on the American and the rest of the world?
So it's moving from a financial crisis to an economic crisis.
And I think that is what the markets are trying to figure out. What will the real impact be on the economies? And potentially it can lead to a so-called double dip, depending on what's going to happen over the next couple of years.
Well, Dawie, I have to interject there, because when you say that the financial crisis is over in Europe, I think it's also quite important to note that the problem is being fixed by printing more money, by adding more stimulus into the economy, by aiding countries. So basically all we're doing is rolling over the debt. That's essentially what's going on. So why are you fixing a problem with more debt? Well, surely there must be another solution.
You simply think, well, what's the other solution? The other solution is to let Greece go bust, for instance. That's another solution.
It's Portugal, it's Ireland, it's
of course.
Italy,
That's
Spain.
roughly about 20% of the European economy. I am also not so sure that the euro will keep on going south. Because this weaker euro, about 15% down from its highs against the dollar, for instance, that will really boost the German economy. You can be
because they're big car exporters of many things, machinery.
But the question is, will there be buyers for that? Will the Americans keep on importing that? And there's a lot of problems in America as well. The jury is still out on that as well. A lot of uncertainty still.
At the euro that has depreciated quite extensively, and you said 15% from its high. I was listening to CNBC Europe this morning, and they were saying that for every 1% that the euro actually depreciates, we also see GDP being stimulated.
About 1% or so, yes.
So that's quite good, and apparently they also don't really want to intervene so much in the euro because they don't really mind seeing a euro that is at these levels.
Yes, but there's uncertainty, this volatility is certainly not good for the real economy as well. I've got a suspicion it's not only the Swiss bank, the Swiss central bank, that is involved in trying to prop up the euro as well. I do think that the Fed as well as the ECB is probably in the market as well. And the market thought up to a couple of days ago that the ECB is a kind of an extension of the Bundesbank. It clearly is not. This is not the Bundesbank. This is a bank that wants to try to support the different governments. They are buying paper, they're buying junk bond, they are printing money, literally. So this is an inflation time bomb slowly developing in Europe. And the moment that economy starts growing, the moment we see some demand coming back there, I'm afraid we're probably going to see a lot of inflationary problems. And we already see that in the UK.
I mean, the euro might have been weak over the past couple of weeks, but historically, it's actually not weak at all. For the first number of years after its inception, it traded at 70, 80, 90 cents against the US dollar, didn't it?
Actually below parity, yes. But again, it's not where it was. It's really where the correct level of the euro should be. I won't be surprised if we see the euro continuing to weaken. I don't think we're going to see parity soon. I think the euro will probably stabilize between, say, 115, maybe 120, 25, around about these sort of levels. The real question is what's going to happen to our currency, the rand. My suspicion is that the moment we get more clarity, more stability on the financial markets, I think the rand is quite attractive, and I won't be surprised if we see the rand coming back quite significantly against the euro and the US dollar. And that means that you have to be bullish on gold as well. I'm not a natural gold bull, but I think under these sort of circumstances, uncertainty in Europe, uncertainty in the United States, a bit more financial stability, a little bit more risk in the world, I think that I won't be surprised if we see the rand significantly
I'm glad
stronger.
you mentioned gold, because gold has been coming off quite significantly. We saw it hit that new high of $1,249 an ounce last week.
And 40 cents.
And 40 cents, Stephen. Thank you so much. But looking at the overall positions that people have been taking with gold, this week it's basically being reversed, and it seems that people are liquidating their positions in industrial metals and in precious metals as well to try and cover losses elsewhere. Yeah. Do you see that being reversed? And also, can I get a comment about ETFs and the role that they've played in the volatility of these prices?
Well, on the gold question first, I think what we have been seeing, the reason we've had a huge run on the gold price. I mean, this was a massive increase in the gold price. Why? And I think part of the reason is that everybody's running to the US dollar itself, but they have so many problems. You just hedge your bets a little bit by buying some gold as well. And I think it's just some profit taking place, and I won't be surprised if we see, the moment we see a little bit more stability, if the gold price goes up again, because of uncertainty of what's going on in Europe itself. And of course, all these different trades and all this increase in liquidity that we have seen in all sort of assets recently, of course, adds to volatility on that. On commodities, generally the answer to commodities is pretty much what's going to happen in China. I think the Chinese economy will probably keep on growing quite strongly, but there is a possibility that we can see a significant slowdown in Chinese economy. For now, I'm quite happy, and for now, Once things return to normality, I will be quite bullish on commodities as well.
And of course, that's another reason why the rand weakened so significantly yesterday, was because although the euro did bounce against the dollar, at the same time we didn't have that support of the gold price, which we've had in previous crises. So in previous weeks, when we have seen the markets very volatile, the gold price has been there supporting the rand, and it wasn't there yesterday.
Well, not that much, yes. So the rand's weakness that we've seen recently is certainly nothing to do with the rand as such. It's what's happening internationally, what's happening internationally. Everybody's running to the US dollar, but of course, the moment we see a little bit more stability, they will start looking around again, and I won't be surprised if they find South Africa very attractive.
Where do you see the rand by the end of the year?
I won't be surprised if we see 7 against the US.
And the euro? Because we were heading for 9 until last week.
I think stronger than 9 to the euro.
Perhaps just a quick comment on some of the economic data we've had coming out in South Africa over the last week. We had those retail sales figures. Of course, those followed better than expected manufacturing and mining production numbers last week. Are we looking at quite a good first quarter growth picture here?
Yes, quite. I think we're probably going to see between 4 and 5% growth, quite nice growth. Remember, this quarter-on-quarter seasonally adjusted and so on. I'm quite bullish about South Africa's economic growth prospects for this year, as long as we don't get that many strikes again, because the strike of last week will probably shave off 0.1% or so.
Yeah, Eskom could be looming with one as well.
That's another one.
And as you saw the lights going up while we were doing the video.
I know, that was Eskom, I promise you.